If your tax refund has been shrinking for the past few years and you don't know why, it's not a glitch, it's not a crackdown on you specifically, and the ATO hasn't changed the rules to take your money. What's changed is the tax landscape around you. The offsets are smaller, your employer's withholding is closer to your actual bill, and the ATO is getting much better at catching claims that inflate refunds before the money leaves. Stay until the 8-minute mark. I'll show you 3 questions to ask before you lodge so you stop measuring your tax position by the wrong number. The biggest single reason refunds have dropped for millions of Australians is the end of the low and middle income tax offset, the LMITO. The LMITO was a temporary offset introduced in 2019 that handed back up to $1,080 to workers earning under $90,000. It was extended several times and became part of how people expected tax time to work. Then it ended permanently after the 2021 to 22 financial year. That was the return lodged in mid-2022. Since then, it has not existed. Not for 2022 to 23, not for 2023 to 24, not for 2024 to 25, not for this year's 2025 to 26 return. The low-income tax offset, the LITO, still exists and applies for lower earners, but it's smaller, and it was always a separate thing. The big $1,000 hit that many people came to rely on is gone. At the same time, PAYG withholding has become more accurate. With single-touch payroll, the system where your employer reports your pay to the ATO in real time, and updated tax tables, employers are now much better at withholding exactly what you'll owe. When your withholding is accurate, the end-of-year result isn't a big refund. It's closer to zero, which is technically the correct outcome. A large refund has always meant you've been giving the ATO an interest-free loan throughout the year. More accurate withholding is better for your cash flow over 12 months. It just doesn't feel like it in July. Here's the other side of the equation, where refunds are still being reduced by the ATO, rather than simply not being as large to begin with. The ATO's published focus areas for 2026 are specific: work from home claims without proper records, car expense claims, self-education deductions, rental property deductions, including interest, holiday homes, and short stay income, an undeclared gig economy, and side hustle income. The ATO has publicly called out that people are claiming private expenses as work deductions, baby items, gifts, meal deliveries, coffee, and signalled it's using data matching to catch those claims before refunds are paid. The mechanism is the pre-lodgement verification system, active since the 1st of February 2026. The ATO cross-checks your return against third-party data from employers, banks, investment platforms, and government agencies before it finalises your assessment. If something doesn't line up, missing bank interest, undeclared rental income, an over-the-top WFH claim relative to your employer's patterns, your return may be held for review. Your refund is delayed, and if the review results in an amendment, your refund is reduced or replaced with a debt. One more thing most people miss: your refund can be offset against other government debts before it reaches your bank account. If you have an outstanding Centrelink debt, child support liability, or old ATO debt that was previously on hold, it can come out of your refund automatically. If your return shows as on hold or temporarily cancelled in myGov, that may be why. Let me give you the framework that actually matters for understanding your refund in 2026. Forget the refund as a reward. A refund is the difference between tax you've already paid through PAYG withholding and the tax you actually owed for the year. If the refund is small or zero, it means withholding was accurate. You didn't overpay. If the refund was large in past years, it may have been inflated by the LMITO, which no longer exists. Or it may have reflected withholding that was too high. Neither of those are signs that you got more money. They're signs that the calculation was off. The actual number that matters is your total tax paid for the year, and how much of it was legally avoidable through legitimate deductions and offsets. The offset's still available for 2025 to 26, the low-income tax offset for eligible earners, the seniors and pensioners tax offset if you qualify, the spouse offset in limited circumstances. Check each one. They're listed on the ATO's What's New for Individuals page for 2025 to 26. If you're eligible and you haven't claimed, you've left money behind. On deductions, everything still applies that applied before the LMITO. Work-related expenses, union fees, WFH hours, equipment, self-education, charitable donations, tax agent fees, rental property costs, income protection insurance. None of that changed. The ATO's occupation-specific guides still show you exactly what your role qualifies for. If you're not working through those guides before you lodge, you're guessing. Let me be specific about what's coming from July 1st, 2026, so you don't get caught by the confusion that's already spreading. The new lower marginal rates, dropping from 16% to 15% on the 1st of July 2026 and to 14% from the 1st of July 2027 on the lower brackets, will reduce the total tax you owe across the financial year. But these cuts will almost certainly flow through as slightly lower PAYG withholding each pay cycle, not as a one-off refund, more in your pocket each fortnight, less or nothing, back in July. And the $1,000 standard work expense deduction is not $1,000 in your bank account if it passes into law and applies from 2026 to 27, which is the return you'll lodge in 2027, not this year. It means up to $1,000 of your income is treated as deductible without receipts. For someone in the 19% tax bracket, that's a tax saving of around $190. For someone in the 32.5% bracket, around $325. Not nothing, but not what the headlines made it sound like. And critically, if your real work expenses are higher than $1,000, you'll need to itemize to get the bigger deduction. The standard deduction can actually anchor people into underclaiming. 3 questions to ask before you lodge your 2025 to 26 return. Question 1, have I checked every available offset? The LMITO is gone, but LITO, seniors and spouse offsets still exist. Log into My Tax and check what's pre-filled in the offset section. Don't assume the ATO has applied everything automatically, as some require you to tick a box. Question 2, have I claimed every legitimate deduction in my category? Download the ATO's occupation-specific guide for your job type. Go line by line. WFH hours. Do you have a log? Union and professional fees. Did you claim them? Self-education. Did a course relate to your current role? Tax agent fee from last year. Deductible this year. These are the deductions most people skip, not because they can't claim them, but because they didn't think of them. Question 3, do I have any outstanding debts that will offset my refund? Check myGov for any ATO debts listed under your account. Check Services Australia if you've previously received Centrelink payments. If you have a debt and your refund is less than you expected, you may have already been paid, just in the form of debt reduction rather than a deposit. This is general information, not personal advice. Your specific tax position depends on your income, your deductions, and your individual circumstances. A registered tax agent can model your outcome before you lodge. If you want to understand what deductions the ATO is specifically watching for in 2026 and what the data matching changes mean for your return, subscribe. New video every week. There's a plain English version of today's 3-question refund check in the newsletter. Link in the description. This is the fine print AU, because someone has to read it.